Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In this part, we'll cover how to choose the right preferred stock ETFs, key risks to watch out for, and practical tips for adding them to your investment strategy. How to invest in preferred stock ETFs. Preferred stock ETFs simplify the process of adding income-producing assets to your portfolio while reducing some risks tied to individual stocks. By investing in a basket of preferred shares, you gain diversification and steady payouts without the guesswork of picking single securities. Here's how to get started. Top preferred stock ETFs to consider. Not all preferred stock ETFs are created equal. Some focus on specific sectors or rate structures, while others prioritize broad diversification. Here's a closer look at some widely traded options. iShares Preferred and Income Securities ETF PFF. Expense ratio 0.46%. Yield around 6%. Why it stands out. PFF holds a broad mix of U.S. preferred stocks, with heavy exposure to financial institutions like banks and insurers. It's one of the largest and most liquid funds in this category. Invesco Preferred ETF PGX. Expense ratio 0.50%. Yield approximately 6.5%. Why it stands out. PGX leans toward rate reset preferreds, making it slightly more resilient to rising interest rates compared to fixed-rate ETFs like PFF. SPDR Wells Fargo Preferred Stock ETF PSK. Expense ratio 0.45%. Yield roughly 5.5%. Why it stands out. PSK includes convertible preferred shares, offering a shot at capital appreciation if underlying stocks rise. Global ex-US Preferred ETF PFFD. Expense ratio 0.23%. Yield around 7%. Why it stands out. With a lower fee than peers, PFFD also diversifies across utilities, REITs, and financials, not just big banks. When comparing these funds, check their holdings, sector weights, and dividend payout history. Liquidity matters too. Stick with ETFs that trade at least $1 million per day to avoid wide bid-ask spreads. Strategies for investing in preferred stock ETFs. How you use preferred stock ETFs depends on your goals. Here are 3 common approaches. Income generation. Preferred ETFs shine as income tools because of their high yields. Reinvest dividends or take them as cash, either way, they can boost your portfolio's cash flow. If steady income is your priority, focus on funds with a history of consistent payouts, like PFF or PGX. Diversification. Preferred ETFs don't move in lockstep with common stocks or bonds, making them a useful diversifier. Their hybrid nature, part stock, part bond, can balance a portfolio during market turbulence. Aim for ETFs with varied holdings across sectors to avoid overexposure to financials. Inflation hedge. While preferred ETFs are sensitive to rising rates, rate reset funds, like PGX, adjust payouts with interest rates. Some ETFs hold securities tied to floating rate benchmarks, softening inflation's impact. Pairing these with Treasury inflation-protected securities tips can create a more resilient income stream. Before investing, consider these key factors. Expense ratio. Lower fees mean more of the yield lands in your pocket. Liquidity. Highly traded ETFs mean easier entry and exit. Credit quality. Skim the fund's holdings. Investing mostly in stable issuers reduces risk. Preferred stock ETFs won't make you rich overnight, but they can be a reliable part of an income-focused strategy. Whether you're building a dividend portfolio or looking for stability, these funds offer a middle ground between the extremes of stocks and bonds. Comparing preferred stock ETFs to other income-generating investments. Preferred stock ETFs aren't the only way to earn steady income from your investments. They compete with dividend stock ETFs, bond ETFs, and REITs, each with its own trade-offs. Let's break down how they stack up. Preferred stock ETFs versus dividend stock ETFs. If you're torn between preferred ETFs and dividend stock ETFs, focus on three key differences: yield, risk, and taxes. Yield. Preferred ETFs typically offer higher yields, 5 to 7%, than dividend stock ETFs, 2 to 4%. Preferred dividends are fixed, while common stock payouts can grow or shrink over time. Risk. Preferred shares are less volatile than common stocks. During market downturns, they tend to hold up better. But preferreds lack upside potential. A dividend stock ETF might rise with the market, while preferred ETFs stay flat. Tax treatment. Qualified dividends from common stocks get lower tax rates, 0 to 20%. Preferred dividends often count as non-qualified, taxed at ordinary income rates, up to 37%. If you want stability and high payouts now, preferred ETFs win. If you're after growth with rising dividends, common stock ETFs might suit you better. Preferred stock ETFs versus bond ETFs. Bond ETFs are the classic safe haven, but preferred ETFs push for higher income, with extra risk. Yield. Preferred ETFs often yield 2 to 3% more than investment-grade bond ETFs. Why? Companies must pay bondholders first. Preferred shareholders take on more risk, so they demand higher returns. Risk. Bonds have priority in bankruptcy. Preferred stocks sit behind them but ahead of common shares. Preferred ETFs swing with interest rates, just like bonds. But they're also tied to stock market sentiment, a double whammy. Liquidity. Bonds trade in huge markets, keeping spreads tight. Some preferred stocks trade thinly, making ETFs a smarter way to access them. Bond ETFs are safer, but preferred ETFs pay more. Your call depends on whether you need stability or can handle some turbulence for extra cash flow. Preferred stock ETFs offer a compelling mix of high yields and stability, making them a solid choice for income-focused investors. They bridge the gap between common stocks and bonds, providing reliable dividends with less volatility than equities. But they're not without risks. Interest rate sensitivity and issuer creditworthiness can affect performance. If you're looking to boost your portfolio's income while smoothing out market bumps, these ETFs deserve a closer look. Start by exploring funds like PFF, PGX, or PSK, and consider how they fit with your financial goals. Still unsure? A quick chat with a financial advisor can help tailor them to your strategy. Ready to dive in? Compare a few top ETFs and see which aligns with your risk tolerance and income needs. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.